Welcome to the Atomic Real Estate Show, Philadelphia's #1 real estate podcast and a Direct Subs production. Real estate investing is not rocket science, and on our show, we'll delve into best practices with a focus on the small things that add up over time. Please enjoy the authentic, informative, and actionable show with our host, Paul Jagelski.
Hello, and thank you for joining us today on the Atomic Real Estate Show. I am your host, Paul Jagelski. Today, I have the distinct pleasure of speaking with Helen Graner. I've known Helen for a couple of years now, and every time we talk, she surprises me with some atom-sized nugget of information. Helen's relentless drive to learn this information is what sets her apart as an unbelievable resource for entrepreneurs and investors such as myself. So thank you, Helen, for joining me on the Atomic Real Estate Show and taking the time out of your busy schedule at Ambler Savings Bank to break your knowledge down into atom-sized bits of information for our listeners. Helen, if you could, please introduce yourself to our listeners and tell us a little bit about what you specialize at Ambler Savings Bank.
Thank you so much, Paul. I really appreciate this opportunity. I am the loan officer here at Ambler Savings Bank. I started in banking about 23 years ago. Whew. I know it seems crazy, right?
Oh my gosh.
I was in Pampers at the time, you know?
Yeah, you must have started like day one.
No, I actually started in high school for a small community bank. I started out as a teller and worked my way up through the branch, customer service, branch supervisor, branch manager. And then when I was in college, I did my internship in the accounting department, decided to stay on through grad school and, aggressively making my way through the accounting department as well. After I graduated grad school, was given an opportunity to go to another community bank as a financial analyst, eventually became the controller and vice president of accounting. Made my way through there and, to another community bank, living in accounting and all, meanwhile, running numbers and, trying to figure out what my purpose was for doing so. And the opportunity came up at Ambler, and I'm like, in a lending function as an underwriter. I'm like, well, I'll be able to use, some of my experience as far as, looking at tax returns and, filing tax returns for the bank and journal entries and that kind of thing. And it kind of fit. I can tell you it helped that I had a 7-minute commute from home as well. It was very, very convincing when they offered me the position. And I was like, okay, well, I don't know if I want to do underwriting the rest of my life, but for the time being, it fits. And then the opportunity, came up to become a lender. And I was like, you know what? I don't know that I want to do it, but I'm going to try it for a little bit of time and see what happens. And here I am 8 years later.
Those little experiments, they turn into long-term things.
Absolutely. It's mind-boggling how it kind of all fits together. I thought I was going to be in accounting the rest of my life. Never in a million years thought I would be in a lending position, let alone in the commercial lending department. But here at Ambler Savings Bank, we have lots of various products and things like that. I feel like, the community bank function, didn't really get traction until back in PPP with COVID. Okay. I can tell you most people didn't even know community banks existed until that time period. I did because I worked for, a handful of them before I got here. But, with PPP, the larger banks were actually letting their customers down because they weren't able to help them during the pandemic. So people were coming in here absolutely crazy, like, you need to help me, you need to help my business, what can we do? And that kind of word of mouth, went a huge way as far as the pandemic and saving businesses. And now people are looking to us for, various different things and, sending their friends and family over too.
It's funny that you mentioned that people don't even realize about these smaller banks, because I'm one of those people. throughout my entire life, big bank, big bank, big bank is what you're taught.
Hmm.
Little banks are scary. And when I became into real estate and started, looking into investing and stuff like that, all these investors like, no, go get a relationship. You got to get a relationship. The smaller banks. And I'm sitting here literally shivering in my pants. Like, I don't want to go talk to these are people that are actually going to look at me. Big banks, I can just file online and they never have to see me. And then I met you and you changed all of that.
And we're trying to branch out. Obviously social media is great. Doing stuff like this, podcasts, getting our name out there. We actually have 3 different commercials that are airing right now on cable TV.
Wow.
In Montgomery County specifically. Since we're a Montgomery County based bank, I'm actually in 2 of the 3 commercials. So if you see it, you will be like, oh, that's Helen.
Yes.
Absolutely.
So you enjoy working with us investors, huh?
Yes. Yes. And it's funny. The first time I actually saw the commercial, I was at the gym and I was looking at the TV. I'm like, yep, that's really weird seeing myself on TV. And the guy next to me was like pointing at me. And I said, yeah, that's me. And I'm struggling on the elliptical machine, trying to take a picture of myself on TV.
See, you got to hide behind podcasts.
Exactly.
Those commercials are overrated.
Absolutely. I never thought in a million years I'd be doing commercials, and here I am doing a podcast too. So
look at that. I mean, you never thought you'd be a loan officer. You've done that for 8 years. You never thought you'd be in commercials. Now you're doing that. And hey, now you're on a podcast. You're just branching out.
I am. And I'm loving every minute of it. So.
Oh, that's awesome. I am going to bring you to these investors that you mentioned, though, because I want to learn a lot more about that. And I'm sure some do our listeners. What are some of the biggest hurdles that you see investors go through?
I would say number one, they start the process way too late. I have people come in here, with an offer, a signed agreement of sale potentially, and they're like, okay, well now I need financing and I need to close in 30 days. It's not realistic, especially, when the market was extremely hot. You couldn't even get title insurance in 30 days, let alone, an actual loan to fund a purchase or a refinance transaction. So I say, to all my investors, especially if they're just starting out, start early. What the process is, reach out to me as far as, a resource, and literally, just kind of go through the timeline. Number one, you want to save for your down payment, any potential renovations on the property, and obviously closing costs. You want to make sure you have enough to cover all of those items before you even go to look at a property. Second, you obviously want to contact a real estate agent. They're the professionals in their field for a reason, and they're, wonderful resources. I have an entire slew of them that I reach out to on a daily basis. After you get the real estate agent, you obviously would need to get a pre-approval or pre-qualification. There is a difference between the two. Pre-approval is actually just in the residential realm. Pre-qualification is more on the commercial side. And the difference between the two is a credit report. So when you get a pre-approval, they're running credit and they're looking at all of your numbers and things like that. Pre-qualification is more general information. We fill out a personal financial statement. These are my assets, my liabilities. This is what I look like on paper. Most of the pre-qualification is based on things like an appraisal, and I'll go into that in a minute. After you have the pre-approval, pre-qualification, you're going to want to find the property because you want to know what your buying power is. I have, $500,000 pre-approval, and that's exactly, where I'm looking.
Yep.
Most people start looking at that higher number. I always encourage people to, aim low because you don't want to overextend yourself, especially if it's your first rental property. You don't want to, go out there, flexing your muscles and say, oh, I can, afford $500,000. Well, why wouldn't you look at, maybe 2 properties for $250 each?
Very good point.
And there's always the topic, flip versus hold. So I have people that don't know, what they want to do once they acquire the property. So I'm like, you have to figure out exactly what you want to do with the property. And some people don't determine that until later, which is fine, but you want to know in the back of your head, if the renovations are going to cost X dollars, do I really want to do this if I'm going to flip it, or if I want to do that if I want to hold it? Because obviously you want to put obviously quality things in no matter what, but you might get, an upgraded HVAC system versus, the, standard if you're going to keep it versus flip it.
Correct.
Does that make sense?
Oh, absolutely. Having a plan A, B, and I always say make sure there's a plan C in place is imperative.
Yes, exactly. Most people also, after, they find the property, they don't verify the zoning. So the city of Philadelphia, especially, is really bad about that. I know multiple people that have, duplexes, triplexes, and if they don't have a valid renter's license on that property, the city of Philadelphia has been going back and rezoning to single family houses. I've had, I don't know, a couple of dozen in the past week or two, just alone in the city of Philadelphia. And that process is a nightmare to go through to have it change back. And I'll touch, on renter's licenses and things like that later in my conversation. But you obviously want to make sure that the zoning is, appropriate for that type of building.
And that means the previous owner could have not had a renter's license, and that's when it fell back. So it could have fallen back into previous zoning even before you.
Exactly. And, honestly, back in like the 70s, 80s, especially in the Roxborough Manayunk area where I'm from originally, people actually, converted single family residences into duplexes, applied for the actual, rezoning through the city of Philadelphia, but never actually took the next step and had it actually changed on their paper. So there's paperwork out there saying that they applied, but they never actually got it approved. So all that conversion process had taken place, and one of my buyers went in and thought it was properly zoned. Come to find out, it's zoned single family, but it was, in his perspective, a duplex.
Oh, what a nightmare.
So, then you have to involve attorneys and, the civic associations and ZBA, which is the Zoning Board of Adjustments in the city. And that whole process is costly, especially hiring the attorney and having them fight. And they get nitty gritty. So you want to make sure, that you have proper zoning before you, purchase property as well.
Is there a way to check Philadelphia zoning?
Yes. There's something called Atlas, ATLAS. You can go on there, just type the property address, and it'll come up.
Oh, cool.
Some things, there's documentation. If you click on the actual zoning, like RSA 5, single family dwelling, if you click on those words, it'll tell you exactly what documentation the city has on record, and you can see exactly what went through the whole process. And it'll be stamped. Some of the information out there is unstamped, and you'll notice it'll say, refused, but nothing else after, indicates anything had actually been approved. And that's where you kind of have to get the attorney involved.
Oh, what a nightmare.
Yeah. And this particular individual actually had to go back through and take pictures that he never disturbed any of the original wood, paneling and things like that.
Oh my God.
Yeah, just to prove that, the actual structure had been like that when he bought it. And like I said, everything had gone back, from the 70s. Even the neighbors, when he went to zoning, even the neighbors were like, we always thought that was a duplex. I don't know why he has to go through zoning. They were all, under the assumption it was. And so was he when he bought it, but lo and behold, it was not. So costly process later, he was able to obtain the zoning and things like that. But, if he had actually if he had actually checked the zoning prior to his purchase, it would have been much less of a hassle. But we all live.
It was listed on there as a single family on that website?
It was, yes.
Oof.
Yes. And there was a document, I think, from like the early 70s that one of the, I guess it was 2 or 3 owners prior to that, had actually formed, all the paperwork and filed everything with the city, but it was never actually approved. So they never took the next step, and they did the entire conversion. Like I'm talking, splitting electrical meters and water lines and things like that. And everything indicated that it was a duplex, but the zoning did not.
Oh my goodness, what a nightmare.
Mm-hmm.
Oh,
Absolutely crazy. So, and that
30
entire
seconds of internet checking would have helped a lot.
correct. The city of Philadelphia is not forthcoming with anything. Most people don't know, there's resources available. They, find out things after the fact, but, he wanted to make it right and have the, appropriate valuation for that duplex, because he didn't want it valued as a single family residence. It was legally a duplex. There was 2 of everything. And he wanted to make it right. So it worked out for him. The process took almost a full year, but, he's happy now.
So something that, you didn't even really say it, but what I'm hearing out of this from my point of view is I know a national bank never would have stuck by me through that whole process. The fact that you were willing to stick by your client through that process just speaks volumes to the difference between regional banks and national banks. What do you guys see as the big difference that you help investors and entrepreneurs with at a regional bank versus a national bank?
I can tell you, I will basically underwrite the loan before I take the application. So, like I said, I'm a numbers person, and I don't like to waste people's money. Small community banks, we don't like to charge fees for things. Obviously we want to look out for the customer. So I will basically sit down and, construct an entire calculation to make sure before I even take someone's money and order an appraisal or anything like that, that the numbers make sense and the deal makes sense for my borrower. In addition, if there's, if it's over a certain dollar threshold, any deal at any bank, let alone, a small community bank or a larger bank, there's something called loan committee. That loan would have to be approved from loan committee. I can tell you every single person on loan committee at Ambler Savings Bank is located within these 4 walls in Ambler.
Wow.
So I can call loan committee within minutes if needed, and we can get the approval process through very quickly. In addition, the paperwork does not leave here. I don't have to go outside, Ambler. I don't have to go to another city or state or anyone else to wait on someone else to approve it to get it back to me to tell my borrower, okay, we're good to go. And that helps obviously in the purchase scenario when people are waiting for agreements of sale and things like that too, to go through.
So is this what people call the 5 C's of lending?
Yes.
Now it's making more sense.
Yes.
So you can actually sit down with these individuals, understand their character, who they are, the capacity that they're looking for, the capital that they currently have, the collateral that they can use against it, and their overall condition of the loan itself.
Loan. Yes, exactly.
Interesting.
Exactly.
So rather than them just putting in an application and somebody in, I don't know, Idaho being like, nah, don't like those numbers, rejected. You can actually look at them as a human being and their overall look and be like, you're a good person with a good business plan and you're going to make money. Let's do this together.
Yep, exactly. And I'm a phone person. I'm not an email person. I'm old school. So I will sit on the phone with people and say, okay, well, this is how we underwrite it. And I can get into that in a few minutes as far as our timeline is concerned. But, I walk through them, walk through every single step of the way, the entire process. And like I said, basically underwrite it before it even goes to an application status. But after zoning, I would, obviously have my borrower determine ownership of the property itself.
Ooh, that was going to be my next question.
Okay, I knew it was coming.
Yeah.
I get the question a lot.
Explain it.
All right. So as far as ownership, obviously you can have personal name and or an LLC. So you can do a combination of the 2, or you could do them individually. most people don't know, especially if they're new investors, that you have an option. Personal name, there's pros and cons to all this stuff. Personal name has residential underwriting indicated to it. So most people, if you go into a bank and you say, I want an investor loan, I'm buying it in my personal name, they'll basically underwrite you as it was your primary residence.
Okay.
Kind of the same theory, but in LLC, you want to make sure that not only the LLC has borrowing capacity, but the personal name person has the ability to guarantee the loan. So
okay.
There's changes in the underwriting as far as the criteria, but just to think about a few things as far as insurance is concerned. Say, for instance, you have a property in your personal name, someone slips and falls in your investment property. Who are they coming after?
Me.
Yeah, exactly. And in the LLC, you have some protection there as far as, liability. So, I always encourage people to think twice about that as well. Obviously, the con to starting an LLC is that, there's formation fees to an attorney, things like that. And that process can take a little while, getting the IRS tax ID number, registering it with the state of Pennsylvania, forming an operating agreement if you're more than one person buying a piece of real estate in an LLC, things like that. In addition, most people don't realize if you pick one and decide to change it at a later time, there's tax implications for doing so. So if you buy, an investment property, husband and wife, and you decide at a later time to switch it to an LLC, every city, state would charge transfer tax for doing so. They view it as an actual purchase and sale transaction. So you want to make sure before you buy the property, before you put a name on the agreement of sale or on the offer, that you determine what you're going to put it in, personal name or LLC. And then eventually sign the agreement of sale. And then the fun part, after the agreement of sale is signed, finding financing. Sometimes the process for finding financing can come, sooner, but usually after the agreement of sale is signed, that's when people start looking for financing and, obtaining appraisals, inspections, and all that kind of fun stuff. Yes. So you can pick personal name or an LLC as far as the actual title of the property. You just have to make sure that in the event that you want to change later, that there's tax implications for doing so.
So are you reselling the property then if you change it?
That's how the state views it. So if you buy something in your personal name and you decide for, insurance reasons, you read some article and you decide to change it, they actually charge the transfer tax for doing so. They view it as a buy-sell transaction, and you obviously would have to pay both sides. In the city of Philadelphia, that's a little over 4% of the market value. So
Yes.
Exactly. So you want to make sure before you actually purchase a property that you are titling it the way that you want to hold it. If you're flipping the property, that's not necessarily 100% important unless it, has tax implications on your actual tax returns. If you have something in an LLC and there's various owners of that LLC, you might be filing a separate tax return, for the capital gains and things like that. But if you're a sole proprietor, usually it's on your Schedule E of your personal tax return. So everything kind of flows up anyway. Doesn't really matter. But you want to make sure that you actually title the property first and foremost the way you want it. You don't want to be paying transfer tax unnecessarily. In addition, the other thing I was just thinking about too, insurance would be the downside too for an LLC. Usually insurance companies charge more to insure an LLC than they would in personal name.
Interesting. Little costs, but little costs do add up, especially in this game.
Exactly. So that's why you want to make sure you have, all your ducks in a row, everything, on the table before you even, decide to sit down and sign any paperwork.
Right. I mean, those little things can take away your first year's profits if you're looking for a long-term hold, or it could take away a good chunk of your profits if you're looking for a flip out of it as well.
Absolutely.
So I decided I want to fund I want to buy the next property in LLC. How do I fund that LLC? I started it, I created it, and now I came to you and I go, Helen, I got a property, I got an LLC, and my LLC doesn't make any money because I got to buy the property for it to make money. So what do I do?
So that's what I was mentioning earlier as far as underwriting, two different, kind of schools of thought. Personal name, and residential lending is one area, and then commercial lending is the second. So if you want to take your 80%, 43%, 80% loan to value and your 43% debt to income number out of your head for a minute, that's residential underwriting. So literally you take, all your debt divided by all of your income, and 43% or less, you'll get approved for a residential loan. That's, residential lending underwriting. If you want to think about LLC underwriting, and we underwrite personal name and LLC the same way here at Ambler Savings Bank. I can't speak for other banks, but we use debt service coverage ratio. I don't know if you've ever heard of it.
Yeah, speak to me about that. I like that.
Okay. And it's kind of, they always say lending is like an onion. So like if you think about, personal residences being on the outside, then you kind of get, your next layer would be, owner occupied duplex kind of thing. And now you're, looking at the investor stuff, maybe layer 3. So as far as individual and LLC lending at Ambler Savings Bank here, like I said, we use debt service coverage ratio. And what that means is we don't view the actual equity making the loan payments. So if you have, a $400,000 property, people want to come in and just get 80% of that, or 75% of 400,000. But what happens, with the volatility of the market, that 400,000 can be 300,000 tomorrow.
Yeah.
And it works in a residential situation. Obviously, if that's your primary residence, you're living there, they're qualifying you based on your income. If you're looking at it from an investment standpoint, who's paying the difference if, the property is now underwater, basically? Not your tenant, it would be you. You're reaching into your pocket, if costs go up for various reasons. So debt service coverage ratio basically takes your gross rental income from your leases. So I'm looking at what you're actually getting from the property. If it's a purchase, we look at the market rents. So say, for instance, we get, $2,000 a month in market rents, or at least depending upon the transaction. We're going to net off all the miscellaneous expenses. We start with a 5% vacancy. We throw in management fee. Depending upon if the investor is self-managing and or they pay a management company. Usually it's about 6% of gross rents. We always throw in insurance, factor that in, real estate taxes, and then we always put like a reserve number.
Yeah.
Usually 2% of the gross.
Wow, you guys, you have very conservative numbers. I like that.
We do. And it's for a reason, because, we don't want to overextend our borrowers, especially if they're just getting into this. City of Philadelphia, I'll give you an example. City of Philadelphia just reassessed all the properties last year, effective this year.
Yes, they did.
I know someone's payment on the residential side here, his payment just went up $800 a month.
Oh my goodness.
Yes, because he made improvements to his property, and his property was reassessed, and now he's paying $800 more than he was last year.
Holy cow.
Yes.
Man, I thought I was in a bad situation. I had like $30.
Exactly. It's mind-boggling what the city of Philadelphia does. And I always use them as an example because it's worst case scenario. Montgomery County did some reassessments too, but not as drastic as Philadelphia.
Yeah, I live in Montgomery County. We didn't get back nearly as bad as Philadelphia did.
Yes. So we want to make sure that we put, conservative numbers in there for that reason. So after you have your calculation there, you put your principal and interest payment on top of all of that. And we have a policy of 1.2 debt service coverage ratio. So you have to cover all of your expenses 1.2 times.
Okay.
Some banks are a little lenient. They'll be at 1.15. Other banks are more conservative than us and be at 1.25.
Interesting. No,
And it all depends on the bank's policy, obviously.
So you guys then can dictate that. So that going back to national versus regional, national, they're going to sit there and say, these are the requirements. You either hit them or you don't. Where you guys, if one hits really hard and one hits a little lightly, you can have that conversation. Is this still a worthwhile loan?
Exactly. And we make that decision here. And we also, Ambler Savings Bank also portfolios 100% of all of our loans. So we don't turn around and sell them on the secondary market. So if we make an exception for something, debt service coverage ratio wise, there's a unit that's vacant, but we, structure it differently. Say, take the LLC as a borrower and the personal name person as a co-borrower and make it work that way. We're thinking outside the box and not, looking at the parameters that FHA or, Fannie Mac and Fannie Mae, all of those have. We can kind of make an exception. We're holding all the paper here.
Oh my gosh, people were right. I really did need to get a better relationship with regional banks much earlier in my life.
Exactly. I mean, think about it. Like we're holding, your loan until either maturity or payoff.
Yeah. And so on a personal point, I had one house, one rental property that was sold off twice this year. So I have to get 3 different 1098s from 3 different companies just for one property for my taxes. Like it's so annoying when they sell off your thing and it just bounced from place to place to place.
Exactly. So obviously we're not doing that. And that's the reason we're so conservative as well. We want to make sure that what we put on the books is going to stay here and, that the borrower is not going to have a problem making their payments going forward.
Now, I said I live in Montgomery County, but I know Ambler Savings Bank is right around the corner for me. But what if it's not right around the corner for somebody else? Do you guys have multiple locations, apps, or anything like that?
We do. We have 4 brick and mortar locations, one being the Ambler location. We have a couple of different community locations as well. They're not actual branches, but inside retirement facilities. We have actually an upgrade coming up soon that will allow us to be more competitive in the wireless market, basically. So our app will be changing, our online banking is changing, our core operating system is getting a complete overhaul soon. So we'll be able to remain competitive not only with other community banks, but now, get into the game with the bigger guys as well.
Good for you guys. That's awesome.
Yeah.
I really want to pick your brain about something that just came out early February. The good old Fed released some information. Now I'm a novice when it comes to this stuff. I hear Fed and I just kind of cringe on the inside of me. But I know you like to deep dive into this. So if you could help me and the listeners understand what just came out with the Fed, that'd be great.
Yeah, absolutely. So obviously over the past year, the Federal Reserve Bank has been increasing Wall Street Journal Prime drastically. I think it's gone up almost 4% from this time last year. We just had another hit earlier this month. So we obviously have to take that into consideration when we price loans. So small community banks, again, thinking outside the box, not having your formula, like a larger bank, we are trying to deviate from Wall Street Journal Prime because it's not really indicative of the market right now, especially if you're looking at residential rates.
Interesting.
So I don't want people to come in and say, okay, well, you're offering 8% for an investor loan, but I can get, a personal loan right now at 6. Why the disconnect? So what I, explain to them now is, we're deviating from, Wall Street Journal Prime, which is almost at 8. But we've used other indexes. So there's something called SOFR, which is the standard overnight funds rate. So we take a look at that. That kind of mirrors the 5-year treasury, sometimes the 10-year treasury, depending upon the day. There is another index called LIBOR, the London Interbank Offered Rate, that is going away at the end of this year. So SOFR kind of replaced LIBOR. But again, the three indexes, LIBOR, SOFR, and the treasury bills, they're kind of all mirror around each other. So it gives us a competitive edge if we can, take a look at what those indexes are pretty much on a minute by minute basis, rather than actually wait for the Fed to keep increasing rates and, killing our deals.
You gotta love that Fed. So all right, with that, where do you see this market taking us in 2023?
That's a $1 million question. That is a million.
Helen, come on.
It's a $1 million question. Honestly, the housing prices are going to be determine mortgage rates. I think the rates will come back down maybe by summer. They're actually anticipating the Fed decreasing rates hopefully by the end of this year.
Ooh.
We'll see. They're going to increase before they decrease again. It's just a matter of when. I think they're going to level out, my personal opinion, somewhere between 5 and 6.
Okay.
And I think that's going to be our going rate for a while. And I think that's where we should have been a long time ago. And, we're just being, reactive instead of proactive.
Yeah. 5 and 6 would be a phenomenal number to hover around. People don't realize, I don't think, that that's still historically very low. That 5 and 6 would do wonders for our economy.
Exactly. So that's just my personal opinion, but we'll see. We'll see what happens as far as that's all concerned.
Yeah, we'll fast forward a couple months and then we'll replay this.
Exactly. I do have a couple of little notes too, if we have time.
Absolutely.
So jumping back into the whole process with title insurance, I always encourage people to get title insurance no matter what the transaction is concerned with. You want that for your own protection. Things, can rear their ugly heads after a closing, and, you want to have that protection, number one. But most of my investors do not realize that if you buy property in cash, like you don't actually take a mortgage on any property at closing, and you ask the title company to leave title open, quote unquote, if you decide to refinance that transaction or that property, inside of 12 months, you do not have to pay title insurance a second time.
Ooh.
So most people don't realize that. And the title company is not going to tell you because they're just going to charge you.
Absolutely. They're not going to say anything.
So you want to make sure that, if you buy property cash because you're trying to get the property, be the competitive offer, if you decide to refinance and take the cash back out at a later time, if you leave title open, you have 12 months from the day of closing to take advantage of that.
And you said you tell that to the title company?
Yes.
Okay.
Yep. You're going to tell the title company, leave title open, and then they'll know that, there's another transaction coming within 12 months. And there's no penalty if you decide to leave title open and you don't do anything in 12 months. But you can't kind of go back after 6 months and say, oh, decided to do something. Can you reopen title? They won't do it.
Oh my gosh, that's a win-win. That's so amazing.
So you just want to make sure that you tell them up front. And that only applies if you're paying for a property in cash. So if you have a mortgage, it does not apply.
And I want to hit upon a little subject here because I always like this one because it gets people a little confused. As a buyer, you can waive your mortgage contingency and say it's a cash offer. You can show up to the closing table the day of with a mortgage lender and they can write you that lending. Just because you waived it doesn't mean you can't use it. It just means it can't be used against you in the purchase.
Correct.
That's one that comes up a lot, especially on my end out of it. And I love when people can clarify that. It is a huge question in our world out of it. But yeah, I want to see where this market takes us. I'm excited for the 2023. I always explain people that housing prices are like stocks. They're going to go up, they're going to go down, they're going to level off. And I'm hoping 2023 is more of a level off year than a up and down kind of year.
Absolutely. Me too. I second that. So
Sure.
we'll see what happens. Just a few other things I have here. Flood insurance. Most people don't realize if you buy a property and locate it in a flood zone. Obviously, it's a federal regulation that we have to escrow for flood insurance,
Yeah.
but you do not have to carry flood insurance if you do not have a mortgage.
Oh,
So obviously, I'm not telling people not to get flood insurance, but that's your liability there. You do not have to pay for flood insurance if you do not have a mortgage because they can't escrow it.
interesting.
Yes, and you're limited to 250,000 for a residential property and 500,000 for a commercial. So, say you have a property worth 500,000, and it's a residential, residentially zoned property. You wanted to make sure, you're fully insured as far as flood insurance is concerned. You're only actually able to get a maximum of 250 anyway.
Huh. Flood insurance. They always throw little freaking wrenches in this game.
Exactly. Exactly. And one other thing, just jumping back to what I was talking about earlier about rental licenses. I know, City of Philadelphia, again, makes things an absolute nightmare. Their process for rental licenses is actually changing. They started lead inspections, I'm sure you know.
Mm-hmm.
But in order to get your renter's license, you need a lead inspection and all your paperwork in with the City of Philadelphia. Honestly, that's good, to have in the event that you have to evict a tenant, things like that. It also enables you to actually sign up for a program with PGW called the Landlord Cooperation Program. And they will tell you, because gas is actually one of the actually the only utility that they are able to lien your property for. So say, for instance, you have a tenant in your rental property and they haven't paid, the gas bill, whatever time, they have $1,000 that's due. Well, they are moving and they have left your property. You don't find out now until you go to refinance or sell the property. Do you remember which tenant was in there that you hasn't paid the gas bill? And so it will show up on title insurance, and you have to pay it, and it would be netted out of the proceeds at closing.
Oh my goodness.
So that obviously it's a benefit to go through the hassle of getting a renter's license with the City of Philadelphia, so you have that protection.
And how do I go? I go to PGW to get that?
Yes, PGW LCP, Landlord Cooperation Program. But you have to have a valid renter's license in order to be able to take advantage of that.
Well, we're going to spend another day going through valid renter's licenses because that's a whole nother world of things.
Absolutely.
we both know that one.
Yes, we do. All too well.
Yeah, all too well. We'll continue that one off there.
Okay.
But yeah, no, I think I got to go check that out myself. I did not realize that gas was lienable. I was under the impression water was lienable.
Yep, any title insurance will be able to tell you that. It comes up very often, especially with properties in the city of Philadelphia. And then you don't know exactly which tenant it was. You're trying to, track down people from 7 years ago, that kind of thing, and you have no idea. Exactly. One other point too, most people don't realize, in the investment standpoint, that there's something called SBA loan as well. The Small Business Administration actually encourages, promoting small businesses and getting them up and started and things like that. Although SBA loans are not an intended use for real estate investment, if someone is considering saying, maybe opening a coffee shop, and there's 2 residential apartments up top, there's a program within SBA. Instead of putting 25% down, there's the ability to put 10.
Ooh.
So it's a huge game changer. And I just wanted to mention it because a lot of people think, real estate portfolio, that type of thing, but don't really, think outside the box again and, mixed use property. Again, it has to be owner occupied in the business aspect, but you can have, residential units and, again, with that onion, kind of peel back, certain things that with the underwriting and things like that and qualify and go from there. But it
And
is
yet again, another advantage of using somebody like yourself, because you're going to look at the whole picture and give these options to your clients versus a big bank just being like, nope, don't qualify, buy.
Exactly. With SBA, the commercial unit has to be 51% great or greater in terms of square footage in order to qualify. I am the only SBA lender here at Ambler Savings Bank. Lots of hats here, which is one of the benefits of being an employee. You learn a lot. The opportunity is there, on a daily basis. Whether I'm looking at a business line of credit, a bed and breakfast that has 11 bedrooms, or a real estate investor that's new to the game. It kind of changes depending upon who I'm talking to on a daily basis.
Yeah, I mean, newbie entrepreneur Eric just walks in. He has no clue what he's doing. He gives you his overall rundown, and you can really help point him in the right direction to make him successful and make sure that you guys are protected as well.
Exactly. We have other programs too that also target women-owned businesses and minorities as well.
Oh God, that's going to be another topic that I got to write that one down.
Absolutely.
Oh my God. Women owned. Yes, we are definitely going to be bringing you back on that for sure. We've got about 4 topics here, Helen. I love it.
No, that's good. And I feel like women, especially in the commercial aspect, I feel like we, are just starting to get into this. Sitting in this chair right now, honestly, banking overall is still male dominated, but commercial lending specifically is very male dominated. I'm, like I said, the only SBA lender here, but I'm also the only female on the commercial side. And I know I have a lot of female investor,
yes,
people that come in too, and they're encouraged seeing another female on the other end of the table. So again, we're making waves, as far as community banks are concerned, in that realm as well.
Yes. I mean, I can tell you from the real estate world, I'm seeing more and more women coming into it. And I'll tell you, they're smart and they're calculated. They're willing to do the checkpoints where the men are really just diving into it. Unfortunately, guys, I'm
Exactly.
sorry.
Women are more meticulous, I feel like, in the whole process. They're the ones that are calculating the numbers to the penny. Versus signing an agreement to sell and running in trying to find financing, we close in 30 days kind of thing.
Yeah. And I mean, speaking from a personal point of view, my wife does a lot of our back of the house stuff that is not really seen by the public. And yes, I am the very first person to run and be like, oh, we got a place, sign this, do this. And she's like, let's run some numbers, Paul, relax, calm down.
Exactly. Exactly. I mean, it's nice to get excited, but at the same time, you want to make sure that you're doing, something in your best interest too.
Yeah, absolutely. And so, yes, we would definitely are going to have you back to talk about that, because that's something that not only hits me personally, but I think a lot of people could use some help on that topic as well.
Yeah, absolutely.
Sweet. Well, Helen, we are coming to an end here, but before we end up, I have a couple more questions that I just want to get out of you real quick.
Okay.
So you wear a lot of hats. We figured that part out. How do you decompress after a long day, week, or month? What is it that just really helps you to unwind at the end of the day?
This is going to be kind of funny. Honestly, I work out constantly, but I also determined that eliminating coffee helps me to just de-stress. Absolutely. So I think back in, I guess it was August of the last year, I decided to stop drinking coffee. Totally, totally just went decaf? For it. Not even decaf. Nope.
Did you go?
I went cold turkey.
Oh my gosh.
So I did have massive migraines for like 3 days. But after that, it was kind of okay. And I was trying to figure out what I liked about coffee, besides like the energy that I got from it, after I drank it. But it was more so like a temperature thing for me. It's kind of weird. Now I just basically just drink warm water. like, I don't like really cold water, so I just drink warm or, to hot side in temperature. So I've eliminated coffee and I'm working out. And the other thing too is I watch a lot of sports.
Yes, go Birds!
Go Birds!
So
Absolutely.
We had the Union in the finals. We had the Phillies in the finals. We got the Birds in the finals. We've got the 76ers looking good.
They're doing well. Yeah, absolutely.
Yeah. I mean, the Flyers, hey, it's all right.
The Flyers are the Flyers right now. So
that's okay. They're still entertainment. They're still fun for our city.
Interesting fact. I was actually the president of the Pennsylvania Sports Hall of Fame for 5 years. So,
what?
Yes. So,
Helen,
lots of sports.
Let's count these.
Lots of sports, and in the past, that I have my brother to blame for. So.
All right. Well, you took my next question away, which was going to ask you what you've implemented in your life that you weren't doing a year ago. And I'm just going to go ahead and answer that for you. You stopped drinking coffee.
Well, wait, I have a different answer.
Ooh,
honestly, I have a different answer.
Right,
it's listening to podcasts.
Hey.
So prior to even having any knowledge about podcasts and things like that, and when you guys had asked me to join the show, I was like, well, I guess I should, search around and figure out what, people talk about and things like that. So I did a little bit of research, but obviously didn't start, listening to podcasts until recently. So I have you guys to thank for that. And I've learned an overwhelming amount of things, not just by this show, but from other shows as well.
Oh, that's awesome. Yeah, the podcast world, it's a different world. I like it. As you can see, we're trying to just stay unscripted, just have some fun, have like kind of that happy hour conversation with our guests so that other people can get little bits of nuggets. So podcasts, yeah, they got a little special heart, a little spot in my heart too.
Obviously.
I got one more. Yeah, well, it's me being comfortable with the uncomfortable, because this is very weird for me. But I do have one more question for you. What advice do you have for your younger self?
All right. I'm going to say quality over quantity.
Yes. Good job.
And I think that, relates to everything in life, friendships, obviously when you're younger, you want to be friends with everyone. And as you get older, you realize that if you have a few really good friends, that's a good thing. In terms of job function, here at Ambler Savings Bank, like I said, we have, a staff of maybe 60 people, but those 60 people do their jobs extremely well. And they, can do the same jobs that, 6,000 people can do at a larger institution. So I think that covers everything as far as that's concerned.
I like it. Well, thank you, Helen, for your time and all your thoughtful insight. This has been truly my pleasure in speaking with you today and listening to you break down your knowledge into actionable atom-sized nuggets of information for myself and our listeners. But before I say goodbye and I let you go, in 1 to 2 sentences, please tell our listeners how they can reach you and an inspirational quote that you find interesting.
Okay. On Instagram, I am hgraner, GRANER _CML.lender. My email address here at the bank is hgraner@amblersave.com. Direct phone number here at the bank, 215-591-4158. And all the information that I've kind of gone over. I didn't even get into some of the, other larger things as far as construction and things like that too. Those details can be found at amblersavingsbank.com. Always surround yourself with people who are smarter than you.
Oh my gosh. That's literally how I lived my management life. People always wondered it. That is the greatest thing.
Obviously, you don't learn everything from a book. And, the people that surround you on a daily basis, you take, whether you realize it or not, you take advice and, resources and things like that from them. And, obviously you become smarter as a result.
Yeah, that's probably the best advice we've gotten so far. I like it. Awesome. I appreciate it. That is unfortunately the end of this episode of the Atomic Real Estate Show. There will be more actionable advice that will be free for the taking on our next episode. So be sure to tune in next week to the Atomic Real Estate Show. Thank you again to our listeners and Helen for being so generous with her time and insight. This has been a Direct Subs production. check them out at directsubs.com. I look forward to hearing from all of you in our comments, and please remember to like, share, follow, and subscribe wherever you choose to listen to the Atomic Real Estate Show.
If you enjoyed our episode, please consider supporting the show by rating and reviewing the podcast. Also, check us out on Instagram at Atomic Real Estate Show to find out when new shows drop and to participate in our community Q&As. The Atomic Real Estate Show was brought to you by Direct Subs. Direct Subs is the #1 place for real estate investors to connect with local contractors for their flips, rentals, renovations, and new construction projects.